Comrades, hey, this is Carl from Ushanka. I'm doing a follow-up video to last week's video about precious metals. Be sure to go see that first, otherwise a lot of this won't make sense. What you're looking at is my Obama cuss jar. It's got a lot more dollars in it than last time, just in a week, thanks to that State of the Union address. And then you're also looking at the precious metals that I've purchased out of that Obama cuss jar in the last 5 years. If this Ice Age is bugging you, be sure to go to commieobama.com and get yourself a Commie Obama hat. Alright? We're going to go straight into my research. It's all slides from this point forward. Housekeeping. This is not advice. It is my research. I want to show you what I've discovered. Do your own homework. Check my math. I could be completely wrong. Second is investing. That is the key word. It's about putting money in and taking more money out later. It's not about stacking. It's not about the end of the world. It's not about the collapse. The goal I presented last week was about finding a silver to gold ratio trading strategy that would increase wealth. So instead of just preserving wealth, which is what is the main theme behind precious metals, I want to make money off of metals, and this might be the right way to do it. I also wanted to set up the strategy where I would only do one trade a year, give or take. Let's see if that worked out. So the data I used was the last 10 years, from January of 2004 to December of 2013. I used general data. I took one date, the first trading day of each month, the average bid of that day, and that's what I use for my data. I'm just going general here. The goal is to play the ratio. That's what I presented last week. The ratio. That was a mistake I made last week. 50 to 1 is the 100-year ratio for silver to gold, but the last 10 years, the ratio is 57.9 to 1. What is happening is a general appreciation of gold over silver over a long, long term. So the idea is if you're going to stack, go gold because it is pulling away from silver at a very slow rate. So I set two triggers basically off the top of my head. When the ratio goes 50 to 1, I'm going to trade my silver and buy gold, or if I just have cash, I'm going to buy gold. When the ratio hits 75 to 1, I'm going to trade my gold for silver, or if I have cash, buy silver. Alright, makes sense? So this whole scenario is around an Obama cuss jar type scenario. It's about small dollars. $1,000 initial investment, $100 a month for 10 years. That adds up to $12,900 total invested. The idea is the investor will accumulate cash until one of these triggers occurs, and then they will buy that metal. And the goal is, at the end of 10 years, to cash out at a much higher amount than what you put in. So the lessons learned, one is the ratio strategy works. It is better than stacking. The second lesson I learned was, trying to set a plan where you have one trade a year, that just doesn't work. So I'm just totally abandoning that piece of this strategy. We had 3 trades total in the last 10 years using this ratio strategy. May of 2006, that's 2.5 years after you start accumulating cash before you actually buy a precious metal. But the ratio hit 48 to 1, and the investor buys 5.8 ounces of gold. Then they wait till December of 2008, and the ratio hits 81 to 1. So now it's time to get into silver. They sell the 5.8 ounces of gold, plus they take the accumulated cash, and they buy 777 ounces of silver. 2 years later, just the opposite. Ratio hits 50 to 1. They sell their 777 ounces of silver, combine it with their accumulated cash, and they buy 17.4 ounces of gold. Here are the results of this strategy. At the end of 10 years, they have $3,600 on hand, accumulated cash, plus that 17.4 ounces of gold. The total portfolio value is $25,251. They get an ROI of almost 96%. Let's compare that to stacking. If they had just put that $100 a month into the silver At the end of 10 years, they would have had $20,749. They would have had an ROI of about 61%. If they had just stacked gold over those last 10 years, a little bit better, $21,837, the return on investment would have been around 69%. I have not changed my cuss jar investment strategy yet, although this ratio trading makes a lot of sense. I want to lean towards gold, so I might just wait for the trigger to go from silver to gold and do it that way. But you know, it's still open. Right now, the idea is every time the jar has enough cash in it to buy a sleeve of 20 American Eagles, I'm going to do that. That's what I've been doing this past year, and I'm going to continue with that at least for the short term. So we're talking precious metals, and I don't want to talk collapse or all that, but obviously if you're a precious metals investor or interested in it, there's a reason behind that, and chances are the reason is what's going on in the world today. There seems to be more risk to liberty and more risk to savings, and you know, a lot of sticky fingers out there. I won't mention names, although have you seen my hat? So last week I talked about MF Global, Cyprus, and QE. All right, just basic threats to our economic freedom. But in the last 8 days since that video, 4 more things have hit the news. 4 more reasons why you should look at precious metals. So I'm with you on this. I don't want to talk collapse, I don't want to talk end of the world, but I am with you that there are risks out there. They're showing their faces, and if you are informed, you're a better investor. Argentina's a mess. Turkey is a mess. Now there's a bank out there saying you can't have your money, and now you got Obama presenting some kind of treasury retirement fund. All that is your retirement dollars closer to his hands. All right, I want to throw out a Ushanka tip to the YouTuber The Micmac88. He's been trading email back and forth with me, guiding me through this ratio stuff. I found him after last week's video. He has done some research on ratios. He has some strong opinions, and he knows this stuff. I trust his judgment. Go check him out. Give him a chance. Last, here's my to-do list for my next video, because you guys, you sucked me in. All right. I'm going to calculate the trade cost for ETF and physical. I know you guys hate the ETF, but hey, if you're putting money in and taking more money out, you got to get over this paper thing. All right, I'm gonna keep digging you on this. Second is I want to tweak the strategy so that it emphasizes gold, it accumulates gold. So I'm going to do that. That'll probably be called strategy number 2. I also want to throw in some calculations for inflation. I got to figure out the math on Excel to do that. And I would appreciate any ideas for future videos. I'm having a lot of fun with this. It's all about having fun. It's getting out of that bomb shelter, putting down your freeze-dried Snicker bar, and having a little fun at the expense of what's happening in the world. That is all. You guys have a great day. I'll see you next time.